Hello everyone, thank you for joining us on this Saturday morning and welcome to this educational presentation. Now this morning I'd like to talk to you about pullback trading made simple. Pullback style of trading is very common, it's very popular. The only trouble is a lot of traders have difficulty in identifying a valid pullback. Oftentimes you'll think a stock, a future, or a currency pair is pulling back, and in all actuality what's happened is that it's changed trends. So it's difficult to find out when it's really in a pullback or when it's changed trends. For example, let's look at this chart here in COF. Just right off bat, someone would say, well, we're in a short-term uptrend. Look, we're making higher highs, and this looks like it's going straight up. And then just when you think you're in an uptrend, this happens, okay? So now you say to yourself, okay, well, wow, now we're in a downtrend, so I'm really confused. I don't know which direction the market is going, and therefore you really have no idea whether this is a pullback or whether this is a new trend to the downside or whether you should be just looking to short automatically. Well, I'm going to teach you the two rules to a very popular and consistent method today. Now, the first rule would have looked at this and said, no, this is not a change of trend. This is simply a pullback, a buying opportunity at a lower level. And the second rule to this method I'm going to be sharing with you today would have actually identified where to get in right here. So had you taken advantage of this pullback method, and this was roughly about 5 months ago, you potentially could have captured up to 60 points in the next 5 months coming into June. So you're going to learn these rules today. Now, a lot of traders always find it difficult to learn a new method or rules. They say, listen, I'm not very experienced. I don't have a lot of trading knowledge. I really have not been trading for that long, or that's just not the type of trader I am. Well, that's the reason why I developed with ProTrader Strategies, the PTS Primo Charting platform. We developed this platform to make pullback trading simple. Everything is one click away, and even though you know all the rules, even though you know what they're based on and what the requirements are, you have one click of your mouse and you can find out exactly where these two things are. So this promises to be a great educational presentation today. I thank you for taking time out of your Saturday. My name is Stephen Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, we're a little bit different from other ones in the fact that our only goal, our only purpose actually is just to educate you. We're not here to tell you what we think the market's going to do next week. Did that sell-off mean that we're turning into a downtrend? Does it mean that it's a pullback? Should we buy it? We're not going to tell you any of that because as a good educator, we're supposed to teach you these things so that you can make your decision. I mean, think of it. Think if you wanted to learn any endeavor, any hobby, any career. Sure, you always pick someone to help you, to educate you. But then ultimately you have to go on your own to do these things. The person who educated you doesn't stay with you the rest of your life and tell you what to buy or what to sell, just like this in the market. Okay, so even though we are an educator, we provide you with entries, exits, exit level, stop placement, and full-on strategies. We're there so that you can finally make your own decisions. Now, I've been trading for 44 years. I started my career on the Pacific Stock Exchange, was on the floor of the exchange for 16 years, and out of those years I was a specialist. Specialist is just someone that makes markets in roughly about 50 or 60 stocks. So in my 44 years of trading, I've traded straight up markets, straight down markets. I've traded every system or technique you can think of. It's probably been around before. Everything has just been rebranded. So what I've learned is that the only traders that are still trading, that have still managed to consistently generate profits are the ones that make their own trading decisions. They don't go to chat rooms to find out what everyone is buying or selling. They don't go to trading rooms. They don't watch TV and listen to what the gurus are saying after the close. They don't wait with bated breath for earnings reports or jobless claims. They don't care about those things. They simply follow their method based on simple rules, simple and very easy rules to follow that is consistent. And that's why they're still trading 4 or 5 decades later. All right? Sure, anyone can buy a $10,000 system and have a great month or two, even a great year. But most of those traders usually give it back. Trust me, I've been there before. My trading suffered tremendously my first year or two of trading. I was lucky enough to have some mentors that turned my trading around. Hopefully, I can do the same for you. And you'll see our dedication to educating you in today's educational class. Now, before we begin, as always, we're first required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are first and foremost an educational company, All examples are strictly for educational purposes only. Now, speaking of education, if you'd like to get education on a daily basis, find out about some of our signals and also little bits of financial wisdom, I invite each and every one of you to follow us on Twitter. If you haven't done so already, there's our handle right there, abbreviation for specialist trading. I would suggest copying that down because every day I post upwards of 4 to 8 different slides showing signals that our strategies have just recently generated and little bits of information behind them, why they were based on that, on generating the signal. Also, bits of financial wisdom I've accumulated along the way. So lots of great free education. So please feel free to follow us on Twitter. Remember, as I stated earlier, we are first and foremost an educational company. I can't tell you how many emails or the office at ProTrader Strategies will send me emails saying, hey, Steve, this guy who attended your class wants to know what you think of the market next week. Or he wants to know what your 5 best picks are for next week. You know, this is, once again, what we're all trained to do. We're trained to have someone make our decisions for us. And this is why it's been estimated upwards of 80% of all traders fail. It's because that really doesn't work. I mean, if you don't believe it, think of the entire industry. Almost every website, almost every course is based on you following their program and just blindly taking signals. It could be in a trading room. It could be a system. The only traders I have found, once again, that have lasted through the course of time, that continue trading, are the ones that make their own trading decisions. So someone says, well, how do I get there? How do I get to the point where I make my own decisions? Because I just don't know what to base it on. That's the service we provide. Through my 44 years of trading, I've learned to find out what works in terms of consistency and what doesn't. So this is what we share with all of our students around the world. So as you see, we are first and foremost an educational company, and a good educator is to teach his student how to trade, not to trade for them. So my goal is not to force feed you signals, but to actually teach you how to trade with the specialist edge. When I was struggling some 4 decades ago, my mentors taught me the same concept. And when I wanted them to tell me just what to buy or sell, they said, no, you have to find that on your own, because you may be able to do well for a month or two, but ultimately it won't work. So this is the same concept we try to instill in all of our students around the world, in over 115 countries and in every state in the United States. Okay, now before we begin today's educational class, just a couple of announcements. First of all, if you have a question, please write it down or try to remember it. I promise I'll get to it. I like to take questions at the end. I have a lot of slides to share with you, and I don't want to stop at every slide and take up too much time here. I don't want to take up all your Saturday morning. So if you have a question, please try to remember it or write it down. I promise I shall get to it at the end. The second one is this being recorded? Yes, it is. So if you have to leave early, if you're having technical issues, can't see or hear me clearly, don't worry. Each and every one of you will be sent a link to this recording. Okay, so please, if you have a question, we have a good crowd here on the Saturday morning. Please kindly wait till the very end of today's class. All right, with that stated, let's begin today's educational presentation. Now, we're going to be talking about a method. I'm going to jump right into it. Let's go right into the buy signals, okay? Now, I'm not going to give you the full rules to this. I'm just going to give you the entry rules. Once you know where to enter, basically exiting and placing your stop is very simple, okay? But let's just talk about entering using this method. All right, rule number 1. What you want to do is apply a certain indicator. It's called the Donchian channels. You can find them on just about every platform out there. They're very common. So what you want to do is set them to a 21 period. Sometimes they're set to 20 period. So what you want to do is just adjust them, go into your edit box, and apply the 21 period Donchian channels. Now what you want to see once you've applied them is that all 3 Donchian channels are headed in the same upward direction. Now you notice here I did not say all 3 Donchian channels are in sync. They don't have to be in sync. They just need to be headed in the same direction at their own pace. For example, let's look at this generic chart here. We specifically made it generic so that you wouldn't think, well, this only works with stocks, or this only works with currency pairs, or this only works with Bitcoin. Works with everything, regardless of the time frame or the market. Okay, so someone looking at this would say, well, Steve always says to trade with a trend, and obviously we're in a downtrend. So I should look to go short here, right? Well, here's where the Donchian channels come in. You apply the 21 period Donchian channels, and you want to see, Donchian channels look like this, and they have 3 specific lines or channels. You want to make sure that they're all headed in the same upward stair-step direction. Remember, they don't have to be in sync. For example, as you can see in the middle Donchian channel, we are going upwards. Every setting is upwards, whereas the top one is going sideways. So someone would say, well, Steve, they're not headed in the same upward direction. Remember, as long as the previous, even though the chart started a little bit too late, as long as the previous setting was lower, that's just a stair-step approach, similar to this. If you just were seeing this, you'd say, well, Steve, it's just going sideways. But look at the last posting, it was lower. So it's headed upwards, even though it's gone sideways for a sustained amount of time. It came from a lower posting, okay? Same down here. So they're all headed in the same upward direction. That's what you want to see. Why? Because it's telling us that we're actually in an uptrend. Okay, so let's move now to rule number 2. Now, the price bar, that's price of whatever you're following. Remember, this could be a 5-minute chart, it could be a monthly chart, makes no difference. But the rising price bar now begins to sell off. What happens usually is the price bar is rising along with the Donchian channels, but then it starts to touch or grab or hug that top Donchian channel, and then it starts to sell off. So most traders would say, well, that's it, we topped out. No, this is more than often a pullback. So wait for a bar that is entirely below and not touching the rising midline channel. This is what we're going to label the setup bar. Now that I've thoroughly confused you and it seems a little bit too wordy, it's a lot easier to show slides, and that's why I like to focus on pictures. So once again, we are having all 3 of the Donchian channels going in the same upward direction, and price rises, and once it starts to touch, oftentimes, it's not a requirement, but oftentimes it'll touch the top line. Usually after that, it starts to sell off, okay? Now, as it's selling off, you want to see it come down closer to the midline. And while it's selling off, you still want to see these in an upward direction. Now, if any one of these had turned lower, either all of them or maybe one of them or 2 of them, well, then all bets would be off. But we want to still see these in the same upward direction. Even though they may be going sideways, they're all coming from a lower posting. Okay, so as we head lower and start to get closer to that midline, this is what we call the pullback. Remember, there can only be a pullback if all 3 Donchians are still headed in the same upward direction. So as they head lower, they start to touch the middle line. And now we have a bar here that is completely below. It's not touching the midline. It's completely below, on its own little island, below the rising middle line. This is what we'll call our setup bar. All right, so what exactly does that mean? Does that mean, okay, we just buy at the market? No, it means we're setting up for a buy signal. But how does that work? How do we enter? Well, here's rule number 3. We're going to enter to go long on the first confirmation of price trading above the previous bar or the setup bar's high. For example, as we see right here, what we want to do is see on the very next bar we trade above. Let's say on the next bar it didn't trade above and we went lower. Okay, as long as these Donchian channels are still headed in the same upward direction, well, now this setup bar will move down to the next one. Okay, once we see one of these Donchian channels head down, well, then the setup is negated. We are no longer in an uptrend. That's why this is no longer a pullback. So this is where we want to buy initially. Let's see what happened on the next bar. Well, the next bar we actually opened, we gapped higher. So you would have purchased on the open, and by the end of the day, you have a nice little profit. And then look what happened after that. See how simple that is? Now, do you notice I did not mention anything about earnings? I didn't mention anything about support and resistance. I didn't mention anything about the jobless claims, or I didn't mention anything about having to go to a trade room and find out how to do this on your own every day. No, you've learned how to do it on your own. This is the philosophy behind specialist trading. We want to teach you these things and then have you work out exactly how you want to trade it. All right, let's look at sell signals. Exact same concept. We're just going to turn them upside down. All right, rule number 1, we're going to apply the 21-period Donchian channels. Remember, if your current platform doesn't have them, you should call up your tech support. They should be able to provide them for you. If you don't, there are a number of, I believe, free platforms online where you can apply the 21 period Donchian channels. Now, this time, you want to see that all three Donchian channels are headed in the same downward direction. Remember, not in sync, but in the same downward direction. All right, so once again, we have a generic chart here. Could be a tick chart, could be a monthly or yearly chart, could be the euro dollar, or it could be Bitcoin. It makes no difference. You can apply this to any market. Now, here's the trouble. This is why most traders fail. They'll see this and say, hey, Steve, this is a current uptrend, right? I'm going to buy this. Look at this. We're making higher highs. And that chat room I go to says this is going straight up. You got to buy it. Well, let's see what this method says. The first thing you want to do is apply the Donchian channels. Which direction are they headed? They're all headed lower in the same downward direction. Now this one, once again, we couldn't see where the last posting was, but it's coming, take my word for it, from a higher setting. So they're all coming down. So this is not a valid uptrend. This is actually a selling opportunity. It's a pullback. All right, so rule number 2. The declining price bar, because we're in a downward trend, the declining price bar now begins to rise. So what will happen is, as the bar goes lower, you'll see it oftentimes touch the lower Donchian channel. Okay? Now, once it touches, it'll start to rise. Even though that's not a prerequisite, I'm just trying to point these things out to make it easier for you. Now, wait for a bar that is entirely above and not touching at all the declining midline channel. Once you find that, this will be your setup bar. So in other words, price has been declining. It touches this bottom line here, and then it starts to rise. It starts to kind of almost like a magnet, magnetize towards that midline Donchian channel. Now, as we see this, remember, if one of these Donchian channels during this rise here all of a sudden went up, or if all three went up, or just two went up, it doesn't matter. All you need is one to be out of sync. This whole setup would be negated. Okay, we'd have to look for something, another market. But as it's rising, as long as these are not changing their downward movement, we're still okay. And now we look for something to come close to the moving, the middle Donchian channel, and then close above it without touching. That is going to be the setup bar right there. Okay, we have the pullback to the upside, and now we have our setup bar. Okay, does this mean we sell at the market? No. I mean, that's a more advanced way, but I'm teaching you the basic entry rules here. So this leads us to rule number 3. We're going to enter to sell our position, to go short, on the first confirmation of price trading below the previous bar's low. So once again, as we look at our setup bar here, what we want to do is sell right here. Okay, once it trades below there. Now it has to do this on the very next bar. If it doesn't do this on the next bar, well then it will go up higher, let's say. Okay, now if it goes up higher, if it opens and goes up higher and closes here, as long, once again, as these Donchian channels are headed in the same downward direction, well now you'll just move that upwards. And you can continue doing that for a number of bars until one of these goes out of sync or until you enter into the trade. So as we see here, the very next bar traded below, you would have entered right here. And look at that nice trade to the downside, right? Now remember, this is the basic entry rules to this method. This is, a lot of you are saying, God, this is great. Where do I get out? Where do I place my stop? How many contracts do I trade? How many shares? These are all important pieces of the puzzle. But right now, we're just talking about how to identify, a simple way to identify pullbacks and a simple way to enter, okay? Now, those other parts are extremely important pieces of the puzzle because that makes up a full strategy. Here's the good news. What I just shared with you were the first 2 rules of one of our most consistent pullback methods. That's strategy number 1, okay? In the strategy, in the course, we teach you all of the places to exit, all the different places you can place your stop, and a number of different ways to enter. What I just taught you right now was the most basic and simplest way to enter and conservative way to enter. We also have aggressive ways to enter. Remember, our job as an educator is to provide you with all these different variables so that you can pick and choose and decide for yourself. Now think about a buffet line, okay? Everyone that enters a restaurant that has a buffet there, okay, everyone is going to be fed. Everyone is going to get their meal. But not everyone is going to eat the exact same meal. In fact, I guarantee if you have 100 patrons in the buffet line, Not everyone is going to pick the exact same way, but they're all going to be satisfied by the end of the meal. Why? Because they picked the meal that they felt comfortable with, that they chose. Someone could go in that buffet line and just take a salad and say, that's it, I'm fine, a glass of water. Someone else could go get a big steak and go a big bunch of potatoes and some fruit and then the dessert, a big drink, and then say, oh, this is the perfect meal for me, perfect. Someone else could have a totally different variable. That's the way trading should be. Trading should never be where everyone trades the exact same way. Remember, the entire industry is based on you doing that. You go to a chat room, you go to a trading room, you buy a system, you enter the same way every time. You get statistics. Take it from someone who's traded that way before and who's had 44 years of experience. It doesn't work in terms of consistency. And if you don't believe me, look at your own trading. If you've bought that $10,000 system, how is it working for you? I've traded $20,000 systems and they've all blown up. Eventually, they all lost everything, even though they had statistics going back decades of how well they perform. So really what matters is that you are a part of the process, that you are making your own decisions. That's why what I share with you today is the basic groundwork for entry. But once you understand this, and once you become a course member of strategy number 1, you see that there are other ways to trade it. You can enter at different levels. You can exit at multiple levels if you'd like. We give you 7 different exit methods. You can place your stop at 6 or 7 different ways. It's all up to you. It's like that. Think of that buffet line. You have to make your own decisions. We are not going to do that for you. Now let's give you some of the highlights. Remember, this is a pullback method. The pullback method is designed to find the overall trend. Once it finds the overall trend, if the trend is up, it looks for sell-offs to buy. So it's designed to buy low in uptrends. And at the same time, if it finds out that the trend is down, well, then it's designed to sell high in downtrends. Okay? The way it does this is by applying the unique Dodging channel application, which I gave to you today, 21-period Dodging channels. Now, the beauty of strategy 1, you can apply it to any market, any time frame, and any direction. But please, if you decide to become a course member, or even with what I've taught you so far today, learn the rules and paper trade first, because I can almost guarantee you, if you jump right in and start trading this Monday morning, you'll lose money. Not because it doesn't work, or not because it's not consistent, but most likely because you're entering the rules incorrectly. You don't have a 21-period Dodging channel, or so many students will say, well, Steve, my platform doesn't have the Dodgins, so I just use a Bollinger Bands. That would work just as well, right? So I use that, or I use the Keltner channels, right? No, it has to be what we're teaching you here. Our edge is consistency. Consistency means an awareness of losses. They will happen from time to time, but that's okay, because a consistent method is able to recoup those losses. That's what will give you that longevity. That's what will sustain you through time, 10, 20, 30 years down the road. You see, a method that hits home runs, that promises the world, and sure, every once in a while hits a huge home run. Well, those are the same methods that lose most of it and then give more back. Okay? That's not trading. That's really akin to gambling. You ever go gambling with someone and you say, gosh, I'm up $1,000 today, I'm doing great. And then the next day they say, I'm down. That's when you trade that way, when your P&L is the same way, that's gambling. You're not trading like a professional. Our job is to teach you how to trade like a professional. Okay, so let's look at some recent strategy number 1 examples. I'm just going to share with you the setup that I taught you this morning, how to identify the pullback and then where to enter using this basic entry mode, okay? And remember, we have a good crowd here today. If you happen to join us later, please remember, if you have any questions, write them down and try to remember them. I'll get to them at the very end of class. Okay, here's an example in Coca-Cola, all right? We have the Dodging channels applied here. They're all going in the same upward direction. You see they're not in sync. This is going up, sideways, up, sideways. This is going just sideways, up, sideways. So as long as they're all in the same direction, that's okay. They don't have to be in sync. So as it's going up, price oftentimes, not required, but oftentimes will touch that top and then it starts to sell off. Okay, as it sells off, it gets closer to the midline, touches it, and then we look for a bar that is completely below. This is our setup bar, okay? So what we want to do is buy once we trade 1 tick above that. So that's our entry point, okay? This is a valid setup bar with the green arrow right here. And on the very next bar, you would have bought right there. Now, notice, we're not saying that it has to close above. It just has to trade there. If you had waited for it to close, well, then you would have had to purchase up here. So that's another way to enter, but it's up to you. This is just buying one tick above. So let's say you had bought Coke. Well, 6 points coming into June, okay? Not a lot, but still not a very expensive stock. 6 points plus, you could have had a number of shares. And if you missed that, there was another example to get in right here. That's the beauty of this. If the trend continues, look what happened. We touched the top, started to sell off, touched here, bounced again, and now we have a bar completely below, but it's a setup bar. You could have bought it again and had seen it gone up. All right, let's look at IBM. This is a little bit different, a little bit more advanced, because to the naked eye, it looks like we're just going sideways, right? Nothing's happening. But once you apply the 21 period, you see they're all headed higher. All right, so we touch, and then we start to sell off, but we didn't come down low enough. We start to go back up again, start to sell off, kind of rise, but now what do we have here? Even though it looks like we're touching, the actual close, which is right here, was actually below that midline. So this is a valid setup bar, but we actually have another one right here. So we have two setup bars you could have taken advantage of, buying right here and right here, 10 points in just about 3 weeks. Okay, that was an IBM coming into June. ADI, all right, analog devices. Someone looking at this would say, hey, Steve, this is perfect. Look at that. We made a bottom here, and now we're really taking off. That trading room I go to on a daily basis loves this stock, says it's going to make new highs. So we are definitely in an uptrend, okay? This is why most traders fail. All of my analysis, all of my justification for getting long was based on what someone or something else told me to do. What is the market telling you to do? Well, this is why we made it so simple on our platform. Even though you understand the rules, you understand what it's based on, we have everything one click away. Because on our platform, as you see here, all you would figure out was in terms of buying, you would have checked your work by clicking on strategy number 1. All right, let's see if this actually is a buy. Click on strategy number 1. In the drop-down menu, click on signal arrows and click on indicator. All right, the indicator obviously is a Donchian's, and the signal arrow is telling you when a valid signal has appeared. Now, obviously, it's been going up, but look at the direction of the Donchian's. They're all headed lower. So what is that telling you? This is not a buying opportunity. This is a selling opportunity. This is a pullback. This is a rise in an overall downtrend. So this is our signal bar right here. So what we want to do is sell once we trade one tick below. So let's see what happened on the next bar. We got in short. Let's see, this is why we say, oftentimes a lot of traders say, well, Steve, I thought you said to sell when it closes at the low. No. You can do it that way if you like, a little bit more conservative, but we always say if it just trades one tick below, that's your opportunity to get in. That's your confirmation. And the stock went down 10 points in a week. So what happened to that chat room that said to buy everything? What happened to that trading guru that said, oh, this is going straight up, going to make new highs? If you stop taking your cue from outside sources, whether that's a person, another trader, or your brother-in-law down the street, or some $20,000 indicator you purchased, you start just listening to the market, adding a few simple rules with some structure, you'll start to become more consistent. All right, here's the example here in Oracle. Here's very similar to what I shared in the beginning. Traders have difficulty because they say, okay, we are obviously in an uptrend, and just when they think it's going up, look what happens. They say, hey, look at that. There was some big news here. This stock is going lower. We have a bearish engulfing pattern right here. Wow, I guess the trend changed. I'm going to be a seller, all right? Once again, based on what someone or something else is saying, or traditional wisdom that really doesn't work. What's the market telling us? Click on strategy number 1 once again in the drop-down menu. Click on signal arrows and indicator. All right. All of the Donchians are headed in the same upward direction. So what's that telling you? This is not a downtrend. This is a buying opportunity. As the price touched that top line, then it sold off, hovered right around the midline, and here's our first bar completely below, the first island. This is our setup bar, and there's a green arrow right below it. So we know that we can buy if it trades one tick above, which we would have done on the very next bar. So we bought right here when everyone was saying, oh, Steve, you can't buy this. This is terrible fundamental news. Whatever this news was, the company's just really going to go much lower. The guy I subscribe to, hates this stock. So why are you buying this? Well, stock was up 18 points in the next 2 or 3 months. Once again, a leading factor why most traders fail. As you look at letter H, it's Hyatt Hotels, okay? Once again, we're in an uptrend, right? Once we apply the Donchians, not so. All three are going in the same downward direction. So all this is not an uptrend. It is a selling opportunity. Now, here was our first setup to go short. But as you can see, we never traded below there. So this is where students fail a lot of times as well. They say, well, we didn't trade there, so Steve says to negate the trade. No, you only negate the trade if one of these decides to go up. And since they're still going sideways from a higher posting, this is now your valid setup bar. You see, the trend hasn't changed. So now it's even better. If it does decide to go lower, you can sell at a higher price. So now, instead of having an entry, if we go back your entry lower here, now you can have a higher entry, which is, if it goes in your direction, if it is a successful trade, which would be even better. And as we can see, it was a great trade, 11 points. Now, if you missed that entry, here's one right here. Could have entered again. Right there. I probably made about 8 points. Okay, we look at Beyond. This is a much more difficult way because it's kind of sideways, but it still follows the same principles. All Donchians are headed lower. As we hug the bottom line, now we start to rally. We touch the midline, but we never have a full bar above it. The lines are still headed lower. Now we bounce up again, and here is our setup bar right there because we're still going in a lower direction. So that's our valid setup bar to go short. Nothing happened. But are the lines still headed lower? Yes. So now we move it up from going short here to go short here. So now this is our valid sell entry point. We would have got short there and 35 points coming into the middle of May last month. You realize none of this is based on any news, what the company's doing, what the economy's doing, what the overall market is doing. We're only looking at the chart in front of us. As I've often said, 99% of everything you need to know comes from the chart in front of you. I stopped looking at news 4 decades ago. And if I'm still here, then I'm living proof that you really don't need to look at that. If you want to, feel free to do that. But why overcomplicate your trading? It is in no way required, in our opinion. News, fundamental information, old, drawn out, traditional wisdom is in no way required in order to become a consistent trader. All that's needed is a simple way to listen to the market. All right, here's that opening chart we shared with you, okay, in COF, Capital One. How did we buy here, all right? Sure, okay, now in hindsight, it looks like a great place to buy, but how could we have done it? Well, all we needed to do was apply the Donchians. As we see here, as price was rising, it's touching the top line, starts to sell off, and here we have our first setup. It never traded there, so we lower it down to here. And you could have potentially in 5 months, if you held on, had a 60-point gain. Now, if you missed that, here was another setup right here. Same exact process comes and we have a bar below it, okay? All right, real quickly, let's look at some different markets and some different time frames because I know not everyone trades stocks. So let's look at a 4-hour chart of the British pound. All right, this was 10th of June. Same process. All the Donchians are headed lower. As we hug the bottom line, now we start to rise. We're above it. We're above it. Here's our first setup. We didn't trade below. Here's our second setup. We never traded below. Here's our third setup. Remember, as long as all of these are headed lower or going sideways from a higher posting, they're still in a downward direction. So we could have sold here and in a couple of days made 95 pips or close to $1,000 per unit in a couple of days. Here's a 2-hour chart of the E-mini futures. All right, this was on the 14th of June. Looks like the market is selling off, right, on this 2-hour chart, but it's selling off in an overall uptrend. All of the Donchians were headed higher, and now they've gone sideways, but that's okay. Just because they're going sideways doesn't mean the trend has changed. You always look back to see where the previous setting was. It was lower. So that means it's a stair-step approach. Now, as we have our first 2-hour bar below, this is our first setup, but we never traded there. As long as we're still in an overall uptrend, then we lower our setup to here. And had you bought there in 2 hours, that's 20 points you could have potentially captured. That's $1,000 in just a couple of hours per contract. And then lastly, remember Bitcoin, how it was falling out of bed in May coming into June? Well, let's look at a daily chart here. The same concept, all three are going lower, even though you can't see the last posting. It's coming from a higher setting on the bottom Donchian. All right. Now we have a setup bar. Our first one was right here. Never traded there. The bar rises. All three Donchians are still headed in the downward direction. So this is our entry right here. Would have been on the 9th of May. And you could have potentially captured 2,700 points in Bitcoin going short. Or let's say you were long Bitcoin. Well, that would have been a good point to exit and wait for a buy signal. Okay. Remember, Bitcoin, it doesn't matter if what it's based off. If you understand what it follows the same process. Okay, because we're looking at these bars, which just represent human nature, what people are doing. There's no reason, once again, to look at announcements about Bitcoin or what someone is saying. It makes no difference. It's all reflected in the price. It's a lot easier to figure out than to figure out what someone or something else is saying. Okay, let's recap real quickly. Strategy number one of our most consistent pullback methods. It trades stocks, E-mini futures, forex, Bitcoin, commodities. Even commodities works fantastic on commodities, and just about anything you can think of, really. It's a 21-period Donchian channel. Now, you must use the Donchian channel. So many of our students say, well, Steve, I don't have that on my platform. Is it okay if I use Keltner channels or if I use moving average envelopes? No, I've tested all those on a number of different similar indicators and tools, but it just won't give you the same results. It must be the 21-period Donchian channels. Now, once you get the Donchian channels, you're free to experiment with different settings, but it really must be the Donchian channels. It doesn't have to be 21, but it needs to be the Donchian. The 21 is just the best overall setting that I have found. You can apply it to any market, any time frame, and any direction, but please paper trade this method first. Don't jump in too quickly and apply the rules incorrectly. Remember, losses will occur. That's okay. What you want is a method that's able to recoup those losses. So many methods now are based on hitting those home runs that will have a great trade, and then they go into a series and series and series of losses. You don't want that. You want, sure, a few losses, and then you're able to recoup them in the very next trade. That's what you're looking for. Ask yourself, do you think this strategy can help your trading for the remainder of 2021? In just about a week, we're going to be halfway through. Are you seeing the type of results you promised yourself in January? Most likely you're not, right? Well, here's the good news. We have a great discount for all of you showing up today and taking time out of your Saturday morning to listen to this presentation. We're going to offer you a number of great bonuses and a number of great promotions. The first thing is we're going to offer you the strategy number one course. You're going to get all the entries, all the exits, all the stops, all that buffet line again, once again, all the things to pick and choose from, the complete strategy number rules. You're also going to get an aggressive as well as conservative versions, okay, to trade with, all right? Remember, this is the strategy we just talked about today, but before I was just teaching you the highlight of the entry. Now you're going to get everything. Usually, if you just would purchase our strategy number one course on its own, the price would be close to $700. We're going to slash that tremendously today. But we're not going to stop there. We're also going to give you an entirely different method. This is strategy 3A. Now, there are two types of trading. There's a pullback method, which I just shared with you, and then there's a continuation type of trading. That's what strategy 3A is. A continuation method is for when you're looking for any type of market that has taken off, that's really gone up. And most traders will say at this point, I missed it. It's too late to get in. My strategy isn't generating signals now. Well, strategy 3A, we'll see if there's still room left in it to go to the same direction, and will generate signals. It does this by applying a unique Bollinger Band setting, and everything is taught within the class. All the entry rules, exit rules, and stop placement. And once again, you can apply 3A to virtually any market, any time frame, and any direction. Let me share with you a few examples. These are old examples, but as you see here, this stock is starting to take off. Most people would say, hey, I'm not going to buy it now. I should have bought it much lower, but Strategy 3A generated a signal, and the stock took off even higher. Here's another example to the downside. Win was obviously headed lower, but according to the rules and requirements of Strategy 3A, it still generated a sell signal at the very low of that sell-off and was able to capture all this more downward move, okay? So we're throwing that in as well. That also costs close to $700. We're going to slash that price tremendously today. But we're not going to quit there. We're also going to give you some extra bonuses. In fact, 7 Saturday morning bonuses. Bonus number 1, you're going to get the add-ons. That's the download for having the arrows for the signals for Strategy 1 and Strategy 3A on nearly all of the most prominent platforms. This is a $1,900 value. Now, bonus number 2. Years ago, I was asked to be the head speaker at a conference in Colorado where I spoke for roughly about 3 hours. The session was recorded, and this is the Secrets of a Stock Exchange Specialist course. It's a 3-hour video seminar. Normally runs for close to $1,000. We're going to slash that tremendously as well. Bonus number 3, a PDF version of my book. Now, in my book, I wrote really specifically deals with my trading on the floor during the crash of 1987. I give a detailed account of what it was like to trade, almost on a trade-by-trade account during the crash. And that's a nearly $100 value. We're going to throw that in as well. Bonus number 4, 6 months of our PTS Primo charting platform. All right, I'll go into the detail just a little bit later, but that's a great bonus in it of itself. Bonus number 5, Secrets 2.0 course. This is where we take it up a notch, and I share a lot more advanced different techniques and edges in which to trade. Bonus number 6 and 7 have to do with applying the PTS Primo charting platform, because we're going to throw in scanners. Scanners to identify the individual strategy setups, and then multi-scanners. You can scan from multiple strategies and multiple things available on the platform at the same time. Look at all these prices here. Look at all the values. We're going to slash all of these tremendously for attending on our Saturday morning. Now, here's what I wanted to talk about. 6 months of our PTS Primo charting platform, because it's going to also include so many other things that I don't have time to talk about that have taken me over 4 decades to accumulate. For example, we're going to teach you how to trade by just giving you 6 months of the platform so you can learn for yourself. Obviously, you're getting Strategy 1 and Strategy 3A, but we're going to throw in the scanner as well so you can scan. We're going to throw in our enhanced buy-sell line to tell you another way in which to determine the overall trend. This comes with over 90 of the most prominent technical indicators. We're also going to throw in personalized tech support, but let's focus on these 2 right here, the signal scanner and the auto-generated exits. Now, I know a lot of you are saying, well, Steve, where do I exit? This is great, but I don't know where to get out. Well, remember, we teach you upwards of 7 different exit methods. This is just one of them that is automatically formatted on the platform where you won't get anywhere else. All right, here's what you do. On our homepage, on the platform, remember, go to Strategy number 1, Greens tab, and instead of clicking before you clicked on signal arrows and indicator, click on Scan. Okay, and you'll see this page appear. You'll click on whatever symbols you're interested in. In this case, I believe it was the NASDAQ 100, and click on Scan. And in less than a minute, you'll see these bars appear, a series of green or red. All right, a green horizontal bar means there's a buy signal in that corresponding stock. A red one just simply means a sell signal. So you can do this on a nightly basis for Strategy 3A and for Strategy 1, as well as the other techniques and tips we have on the platform. For example, here was an older signal in SWKS, all right, Skyworks. That meets all the requirements. Even though you understand what it's based off, you could have scanned for this. And here's the beauty of the other feature I'm going to be talking about. Once you click on Strategy number 1, in the drop-down menu, click on Extension Exits. And these automatically will appear on the chart. These are range extension exits, which we teach you in the course what they're based off, but they automatically appear. You won't find this anywhere else. And we always say, if you want to get in and out of a trade, you roughly use the first or second exit level. If you want to get as most bang for your buck in terms of profit, use the third. Sometimes there are 4 exit levels displayed. Let's say you had chosen the third. Well, that would have been a good place to get out. 10 points in 3 days. And look what happened after that. So you'll take the guesswork out of your exiting. This is a great way to take your trading to the next level. So let's break this down. Strategy number 1, Strategy 3A. 6 months of the platform, all the extra bonuses, all my PDF of my book, also the Secrets of a Stock Exchange Specialist 3-hour course, all of this included. Now, normally, if you purchase it separately, we're talking close to $7,300. We have a great discount for you today. We're only going to charge, but for a limited time only, $297. You're going to save close to $7,000, and you're getting over 4 decades of information, tips, techniques, strategies, things I've accumulated right there at your fingertips, okay? A year from today, you will have wished you became a member of these courses. Take your trading to the next level. Invest in yourself. Become a student of mine, and here's how to do it. Contact ProTrader Strategies. They're my sister site. I developed the platform with them. They're in charge of all the pricing and all the discounts and tech support. I would strongly suggest, if you're really serious about this, giving them a call at 310-598-6677. They have trading consultants manning the phones right now. Be happy to take your order over the phone or to answer any questions concerning pricing or concerning the platform or anything along those tech support issues, okay? Now that link you see at the very bottom is the link that will take you to the sign-up page, and it'll give you some more information as well. It's not a live link, but they've just posted a live link in the chat box in the GoToWebinar column on the far right, okay? Now, as I promised, I would take any questions you had, so if you do have some, kindly go to your question and answer box, type them in. I promise I'll answer each and every one of them, okay? This is probably the most common question I get every week, and that is, what is educational correspondence? Okay, that is simply, you have my personal email address. So each and every one of you will have access to emailing me virtually whenever you'd like. I was answering emails before from my students around the world before this presentation, and so I answer them on the weekends. I'll try to answer them within 24 hours. Sometimes I answer them in 5 minutes if it's if I have more time in the day. But this is like having your own personal mentor right there along with you. Okay, so once again, that's what we mean by educational correspondence. As I said, we have students in over 115 countries now in every state. I would love to be there sitting alongside with you, but this is the next best thing. You can email me whenever you'd like. And it personally goes to me. It doesn't go to an assistant, doesn't go to an account representative. It goes right to me, and I answer your question directly, okay? Someone is saying, does this work on commodities? Yes, it does. I don't know if you heard me say, but if the market decides to change and goes lower, no one knows if it is, but if it does, a lot of traders like to get out of stocks and get more into commodities. This is a perfect way to do that, and it worked great on commodities. I've traded it on commodities before, so it works fantastic. Yes. Someone is saying, thank you very much for your great presentation. You're more than welcome. I hope you learned something today. And remember, I always like to leave you with something to determine on your own. So as you can see, this just wasn't a vending presentation where I'm trying to sell you something. I wanted to teach you something so that you could ultimately improve your trading, okay? All right, so if we have no further questions, as we take one last look at our disclaimer, I just want to thank you for taking time out of your Saturday morning. I hope you learned something, but most especially, I hope you take advantage of this great discounted offer. It's like close to $7,000 you'd be saving. It's not going to last for long, so watch this video, but please make your decision in the next couple of days because it'll go right back up to that price. Once again, thanks so much for attending. Have a great weekend, and I hope to see you in class.